volatile, which is somewhat expected based on the Fed meeting, which is coming up next week. Next Wednesday is the Fed meeting, and I'm really not sure what they're going to say. The odds of an interest rate increase are pretty low. The market's saying 12 to 15%. It's really going to be more about the language that they use in the statement as to when a future rate may or may not occur. On Friday, the CPI was Reserve Consumer Price Index, and we saw a slight increase in inflation, which is a key indicator for the Fed, and they will be looking closely at that for a possible interest rate increase in the future. Again, this is that time of year where the summer's over, we had some moves, and now everyone's kind of getting back to work, and there's a lot of difference of opinions out there as to whether we're overbought or overvalued in the market. So when you get these big moves, you start getting some panic selling. If you listen to TV, which you really shouldn't, most of those shows on CNBC, they're all about day trading or short-term trading, and that's why one day you hear them banging the table to buy, and 2 days later when the market's down 200, you're hearing them yell, "Sell, get out, sell." So I try to get my clients not to pay attention to that. As for the overall market, last week the Dow and the S&P, they were slightly up about 1/4 to 1/2%. The Nasdaq was the big winner. It was up about 2 1/3%, maybe a little more. Apple helped push that with the release of the iPhone 7. But otherwise, for the market, we're still in the same type of position we've been in. The market is still trending higher. Until we see a change, my clients are staying the way they are. And I just don't know when we're going to see something, and it probably won't be till after the election will we start to get a little more clarity on where interest rates are going.